Okay.
Hello, 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 everyone. Mike Arnold here, co-founder, Path Trading Partners, along with Bob Iacchino, who will be on shortly. Mega Cap and Crap Rally continues. Yay. Good afternoon, David. We got that rally I was watching for this morning. Coco, who's buying, Pelosi or Powell? Maybe both. Hello, Patrick. Good evening, Anissa. Waiting for some other people to come on. So, pretty strong rally today. We had the Fed speak out. We'll get Bob's opinion on that. Hello, Josh. Let's see. We had the numbers come out. We had all the jobless claims before. We already covered that. We had pretty big crude build and pretty big crude rally. And then we had the Fed speak. Tomorrow, remember, non-farm payroll Friday, 7:30 Central. So 1 hour before the market opened. So we'll get, maybe Bob will have some opinions on that too. Then also we have wholesale inventories. More Fed speak at 10 a.m. Then you got the rig counts for any of the crude traders out there. What else? FOMC still favoring that 75 basis point, and Fed speak today really favored that 75 basis point, even though this line's not correct. Gamma flip area is 4,000 roughly, and we are still in negative gamma territory, but about 100 points away from the gamma flip. Hey, Dr. Michael. So, if you are new here, please do consider subscribing, ringing that bell, and hitting the like button. Longer term subscribers, leave some comments like you've been doing and like the videos. We're trying to get this to make the push to 5,000 subscribers. Would be a big milestone for a technical analysis channel on YouTube that doesn't pump crap. Hey, Lauren. All right, with that, going to hit the Magic Bob button. Hey, Magic Bob.
So you're saying I can't talk crap?
Yo, you can talk crap. You can use the
Well, then
word
we're not
crap
a
too.
channel that doesn't talk crap if I don't talk crap.
We don't promote crap.
Okay, perfect. That's
You
much
know,
better.
buy GME, buy AMC. Woo, 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 woo. Hey, Dan Jet. When do you expect oil to roll over? Well, we'll get Bob's opinion on oil. Suddenly, Bullard becomes bullish. All right, so let's get, before I get to any technical analysis, let's get to hear what Bob has to say. So we have interest rates going back up, which that was supposedly the reason we rallied the last couple of days, but now interest rates going back up, especially the 10-year and the short-term rates going back up. We still got that market rally. We have people pouring into GameStop and AMC. We have oil up. What's going on, Bob?
I don't know. Well, I do know, but not from a perspective of first of all, I don't understand the suddenly Bullard becomes bullish. It was what the comment I saw that struck me with Bullard was he thinks a soft landing is possible and even likely, which I guess that's bullish equities. I'll give credit to Bullard though. Bullard, people were making fun of Bullard a while back. Basically, he was talking about needing to raise rates, and he also talked about needing to cut rates at times when it didn't need to happen. And he was actually right in a lot of things, but he's wrong in a soft landing. There's not going to be a soft landing. So you want to talk about crude oil first? What do you want to talk about?
Well, first, Michael Jones is back, not having been on the live stream for a while, and Lauren
What's up,
says, "Hey,
Michael?
Bob." So we got such a good crew here, Bob. Let's talk crude first.
Okay. Somebody said, when's crude oil going to roll over? Kind of seems like it did a little bit. You look at the daily chart, you've got the 200 coming in fairly quickly. What's that price level, Mike? I can't see it.
It's about 90. We'll just go off 92.75.
93? 93-ish?
Yeah, 93.
Okay, so one of the things that I always look at is refinery utilization rates. And there's a gap because the EIA was having trouble with their data, right? But the last refinery utilization, well, let me just put it this way. It was 94.5 today. And 94.5, 95 is basically what Oh, we got Michael Blurry again. 95 is basically full capacity for refineries. Now, obviously, there's 5% more to get to 100%, but there's almost always some part of refineries that are in maintenance or repair, or they're just taken down for whatever reason. Sometimes it's because of storms in the Gulf. On average, 95 is considered to be full capacity. We're 94.5. We saw a gasoline draw today, right? So, and a crude oil build. So it's much more likely, in my opinion, that refinery utilization is part of the reason for the big build in crude oil. Um, in other words, they're pumping out as much as they can, and crude oil inventories build when gasoline or when there's nowhere to put the gasoline, the storage tanks fill up, or the crude oil rather. So if refineries are not able to pump any faster, or I should say, refined product any faster than they already are, crude oil is going to pile up. It's not necessarily that there's not demand. Refinery utilization to me has always been a really good measure of demand on the ground right at this second. And 94.5 is a lot of demand. We're still not seeing weakness in the travel sector. And actually, this little dip, plus, of course, the money being given by Gavin Newsom to all the people in California, is going to likely suck up that supply of crude oil pretty quickly. This should take gasoline prices, not in the short term. We'll call it the medium term. Gasoline prices should drop down into the threes, but it'll be the high threes. So, like the average national average for gasoline prices is 475 right now, as of today. Could probably drop down to about 395, maybe even 405, and people will call that a relief. But that's the weird thing about higher prices, especially when they're sustained and dramatic. Um, if you were 150 pounds in high school and you got up to 240, and then you drop down to 200, you're still fat. You're just not as fat as you were when you were 240. By the way, that's a personal story. Um,
So you're
Personal
saying
story.
you weigh 200?
No, right now I'm about 191, but I was 145 when I played football in high school, 142 when I wrestled, and I got up to 240 pounds at 5'9". So I lost a bunch of that weight, but I'm still overweight. It's the same thing with prices. Like you end up feeling like it's a new normal in prices. So crude oil in the short term, I could totally see us going to that 92, sort of 92, 93 level. I think that's about where the break of the weekly double top would be, Mikey. I think that's a 92, 93 low. If you're looking at a weekly,
Yep,
what is that
90,
low?
92, 93. And I need a
Uh,
weekly close. I've talked about that. I need a weekly close
yeah,
below that level, and
weekly
not
close
daily.
below it. Agreed, agreed. Because if you look on the weekly, it's a fairly good looking double bottom. I'm sorry, double
Top.
top. Double top. And the target's somewhere around Citibank's target for crude oil, which is $65. It's the 200 target is somewhere around there. What is it, 64 something, Mike? The 200, the 100%
200
extension?
weekly, and the full target's about 62, just above 62, which is right where the major support level is in the flattening out 200 weekly.
Yeah, you got the 200 there too. So anyway, so I could see that happening. That would be dramatic, but that's what I'd be looking for. And from a perspective of what's going on the fundamental demand side, demand right now is not slowing yet. We're not seeing it anywhere. Not seeing it in refinery utilization, not seeing it in travel data. Um, and there's starting to be cars that are able to be bought. One thing I've noticed, because my wife drives the car all day for work and we're getting to the end of a warranty. So it's time to go look for a car that's under warranty or buy an extended warranty. So I'm like, we might as well look for a hybrid, right? I'd go all electric, but I've already explained why I can't do that. Um, and the hybrids are selling in days, literally in days. So that's some demand destruction right there. But that's more longer term, and it's probably not widespread yet because the supply of the hybrids are not there yet.
Okay, so
According to AAA, California 618 is the average of the state of California. Illinois 523, Florida 448. Wow, Florida's 20 cents below the national average.
Wow. So using your analogy, so since last night I averaged 6 drinks a night, but I only had 5 drinks last night.
So you're fine.
So my liver's improving.
You're doing good.
Just kidding. Any real quick before we switch to equities? Nat gas was crazy today. Yeah, was any comments on nat gas?
Yeah, Nat Gas had a very big build versus estimates. That's not a Nat Gas chart, right? That's
Yeah,
still
it
the crude
is.
oil.
Yeah,
That's a
nat
Nat
gas
Gas
was a
chart.
huge rally today, up 12.5%.
Yeah. So it had a very big. Was it a build or a draw? Hang on, I don't remember now off my hand. I just remember it was much bigger than the estimate. I thought it was a build. Hold on one second. I've got that right here. So the EIA, both were released today. The EIA's had some problems with their data. Um, yeah, a build of 60 billion cubic feet, much smaller than market expectations of 74. So the market was expecting a build of 74 billion cubic feet. We got 60. Okay, so that's the rally. That's the trigger for the rally. But I'm still kind of negative this stuff because we're about to get into the peak air conditioning natural gas season. That's coming up July and August, and then it drops off from there. And what you find with the futures is it tends to, like if you look at a seasonal chart of natural gas, it tends to start to drop off late July, almost like the speculators aren't willing to risk the weather. And then September can be fairly innocuous in terms of demand. September across most of the country is one of the nicest months where you get kind of weather that doesn't demand air conditioning and doesn't demand heat. So July is when speculators start to sell out of these seasonal long positions in natural gas. So I'm fairly negative natural gas, but I don't have any trades in it. But this rally today was based off of the smaller than expected build.
All right, let's switch to equities now. John A asked, did the market already price in quantitative tightening?
Did the market, which market?
Well, we're going to stocks, so did the stock
No,
market? I
no,
don't think
it's
it's
not
priced
priced
in a
in.
lot of stuff.
No, it's not priced in yet. I mean, look, we saw mortgage rates have the biggest drop in a decade today. Okay, from where it was to where it is, that percentage, one of the biggest drops in a decade. Now they're still above 5, right? So it's still much higher than it was. But the media made a big deal about it, and their main claim to fame on this was there's demand for mortgage-backed securities. So the QE hasn't accelerated yet, and the demand so far is being eaten up. That's not going to continue because there's way too much that they need to dump. Now, whether they will dump them or not, I don't know. They said they will. But I suspect that'd be the first place that they would pull back from the overall tightening narrative would be in QE if they pulled back.
Paul asked Bob, how is there so much money if nobody is working? Is the government still handing out free money? I think there's a lot of people working again, but there's still a
Yeah,
lot.
there's quite a few. There's quite a few people working. Um, if you look at the savings rate, for example, the savings rate has dropped multiple months now, but the overall level of savings is still high. And we've talked about this before. Today there was an article. I don't remember who. I didn't read it because it just seemed like theater, the obvious to me. But basically, the first couple lines of it was um, people didn't have anywhere to spend their pandemic checks, so they put them in the bank, raising the saving rates, and now they're starting to spend them. Well, that in and of itself explains people going into their savings to pay their bills. So it's savings. That's where a lot of this money is. But there are a lot of people working. Just wage gains are not keeping up with the rate of inflation, not as of yet.
Hey, Crystal, I see your question. We'll wait till Bob's over, then we'll take a look at that. Let's see. Coco, any thoughts about Euro USD? Time to buy the dip?
We're doing this again. Didn't we do this on Tuesday where somebody said we should we buy this euro dip? And Mike and I both said this chart looks like crap. It was 2 days ago.
Yeah, well,
And now we've got two.
I get this sometimes every day of the week with certain things. This is time to buy it yet?
Look,
Is it time to buy it yet? Because everybody's trying to call either a top or a bottom.
I bought the low and sold the high 4 times in 28 years. Don't try and pick bottoms. Don't, especially not in FX pairs or commodities. You know where commodities can go? Zero. A lot of times you look at a stock like Apple, for example, and you be like, it's a huge sell-off. I can probably buy some of this. And then the minute that trade doesn't work, those same people are like, well, it's a long-term hold anyway. Even though at the time they said it was a trade, right? They said, oh, Apple's collapsed. It's got to snap back. I'm going to buy a few for a trade. And then it doesn't snap back. And they'll be like, Apple's fine. I'll keep it for 5 years. You can't do that with commodities or FX. One of the targets I saw for the euro was 98. So below parity. Now, again, we already joked about what targets are. Citigroup has a crude oil target of 65 and JP Morgan has one of 380. So estimates, they can be very silly. But looking at, Coco says, but we should trade technicals, right? You're correct, Coco. We should trade technicals. I don't see a technical buy signal here. Do you, Mike?
No, there's a super aggressive percent B, but you need a close above today's high, and that would just be for a bounce trade. That would not be for a long-term bottom trade. We have no long-term bottoming signals yet.
Right.
So, that's so yeah, I mean I try to we try to take the chunk out of the middle. We don't try, even a double bottom's not going to call the low. It's going to call, because you're not going to buy it when it's making the double bottom. You're going to buy it when it confirms the double bottom. So
Right.
that's still not buying the low. Dr. Michael says credit card usage is skyrocketing. Let's see, where else? Will the fact that the Fed has so much exposure to mortgage-backed securities cause them to be more calculating with interest rates to keep from pummeling the real estate market?
Let me see that again, please. Will the fact that the Fed has so much exposure to mortgage-backed securities cause them to be more calculating with interest rates to keep from pummeling the real estate market? I don't think so, but it might affect their release of mortgage-backed securities. Currently, they're not talking about selling their assets. They're talking about not reinvesting the proceeds from things that are expiring or things that have run their course, the duration. If they bought a 2-year mortgage-backed security and 2 years have passed, it expires. They used to reinvest that money into a similar asset. They're not doing that right now. I suspect that when they were still buying mortgage-backed security, when the housing market was on fire, it was exactly for that reason, because they misjudged how hot the housing market was. But currently, I don't think they'll make any sort of adjustment in interest rates based on the housing market, but they may tweak the mortgage-backed security sales and purchases and lack of purchases.
We can look at other stuff after we're done with questions for Bob.
Yeah, I've only got like 5 minutes left because remember that time I was on here and we had the car that was broken? I got to pick it up before 6. So
it's fixed.
It is fixed.
Unlike my washing machine, which is still broken.
That guy interrupted the webinar and it was broken. It's still broken.
He said he put in the parts and it obviously didn't fix it because they're coming back again tomorrow.
Hey, Al-Shat, are you there? What is? I can't read how his name is pronounced.
AKSH.
Can you see that last one?
This one?
Yes. I can't. Is that AK?
AKSHAT.
Okay, Akshat's saying Mike goes over the charts after I'm gone. He's not ignoring you. I think he said that multiple times. So don't get aggravated. It's just I've got to talk at the beginning because I usually can't stay as long.
Bob, what are your thoughts about non-farm payrolls? How will it affect the markets?
So it's interesting. This is one of the cases where I think bad news is bad news because the recession narrative. So if we get a slowing of job creation or a jump in the unemployment rate, an increase in the labor force participation rate, people will start talking recession again. The canary in the coal mine for that will be yields. You'll see yields move first. And if the yields move dramatically, then you'll likely see stocks respond to it. Yields lower, stocks lower. That's what I think, but I could be wrong.
Hey, George, did you guys see that Biden exported 5 million gallons of oil from the reserve? Yeah,
That is a true story. Sterling and I were talking about that. That is a true story.
and I
I,
guess
I don't understand why, but that's what happened.
it went overseas.
Some of it went to China, dude. Like some of it, according to people I talked to, went directly to China, who's buying all the Russian crude. And now the ruble's actually higher against the dollar than it was pre-invasion. So, like, there is no effect on the Russian economy with the sanctions at this point. Literally no effect.
John, are we already in a recession? If we are, the Fed doesn't want to admit it.
It's possible. Again, the recession is dictated by when the National Bureau of Economic Research says there's one. And since they've been doing that, I don't ever remember them calling a recession while we're in it. So it's going to be in hindsight. They're literally, we'll get out of the recession and they'll officially announce that, May of 2022 through September of 2022 is officially a recession. So it doesn't really matter what the Fed says or does, whether we're in one or not.
So, I mean, what's the point of that then?
That's exactly correct.
I mean, that's like, oh, isn't that like after the bubbles popped? Oh, I guess it was a bubble. Well, it wasn't very helpful when we're in it.
Yep. Anyway. All right, guys, I got to take off. Anything else for me?
Oh, do you think the data coming out tomorrow will be bullish or bearish for the market?
Yeah. That's basically what I just said, Johnny. It was, I think this is a case where bad news is bad news. So a lot of the times bad news can be good news because it means the Fed's not going to be as aggressive. It's recession narrative if the jobs number is poor. So I think that'll be bad for the market.
I mean,
Stock market, I
the
assume.
Fed speak today was really stressing that they're not backing off on
It
rate hikes.
was.
I mean,
It
they were
was,
like,
especially with Waller.
yeah. So
Waller was on it.
I don't even think if we have a bad NFP print tomorrow that they're going to back off for July.
I don't either. And, even the minutes said that, right? The minutes mentioned recession 90 times by some accounts. I'm sorry, inflation 90 times. They mentioned the word recession 0 times in the minutes. So either they don't believe it can happen or they ain't effing worried about it. One of the two.
Do you think the Fed will suddenly change? This is the last question for Bob. Do you think the Fed will suddenly change course as we approach the elections?
I think they're likely to slow down before the elections. I don't think it'll be sudden. We got the September meeting. That'd be a good time for them to say, if they did 75, then they did 50 again. Then they said, okay, we'll look toward the beginning of next year and see what the effect has been. I could see that. But I suspect it'll be before that they would sort of give the hint that they'd be slowing down. But I don't think the midterms matter as much as the presidential election does in terms of their political leanings. We'll see.
All right.
That's a tough one. I don't know.
Well, go get your car, Bob.
All right, guys. No more talking
Can
from.
you jump on tomorrow with the non-farm payrolls, or do you have another
Yeah.
slot?
No. I should be able to do that. Shouldn't be a problem.
Do you want me to text you?
Yeah, please, because I'll forget.
All right. You'll forget about me? Don't
Not you.
you forget about me.
Goodbye.
Goodbye, Bob. There we go. So hopefully Bob will be able to get on tomorrow morning and we'll get his take on non-farm payrolls. Pretty decent rally. Let me go over some markets, then we'll get to some questions and some other stuff. Yeah, I completely agree, but I actually think it's useless because you know what? At least before, when it was 2 quarters of negative GDP, it was all right. you can spot it. You can say, okay, we're in a recession. But I think one of the reasons they changed it to a bunch of people in suits saying it after the fact is that, when we say it's a recession, and based off political environments, we might not want to say it's a recession, or we might want to delay the recession, or we'll just go back after everything, it doesn't matter, and then say, oops, it was a recession. So, oh well. Again, 133 basis points the S&P, Nasdaq 200 basis points, Dow 100 basis points rallying. We get that pullback in the notes. Let's see where we closed. Oh, geez, look at that. Okay, so right at that 75% level. And technically, we should see, not guaranteed because it doesn't test out at 100%, but we should at least see a push above 39.24.25. Now, cycles are getting toppy on the S&P on the daily and weekly basis. So they're not rolling over yet. So we could easily still see another push up overnight and even tomorrow. But I am starting to get more observant for bigger topping patterns. Okay. We've had a nice little rally. That doesn't mean it can't continue, but long positions are to be more aggressively trailed to stop. Uh, and I'm watching for a slightly bigger pullback. This is a sloppy head and shoulders on the S&P on a 5-minute basis, so I'm just watching for a slightly bigger pullback. But that was a great way, especially up against this harmonic level, to lock in some profits and wait for that possibly bigger pullback with the markets when they reopen with Asia and Europe. You can see it really well for the people who want to learn head and shoulders patterns. Now, this is 5 minutes. But this is what you're looking for. So on your charting platform, if you want a good reference, this is a good reference, okay? Shoulder, head, shoulder. That's very nicely formed. Break of the neckline, okay? So that's the kind of pattern you're looking for, and it's reversing this move. So it's reversing a key move. Just want to point this out, not that we're going to be trading this little pattern, but even if this one does or doesn't work out, remember it's a 5-minute pattern. Here's how you do it. Then you come to where the neckline's broken, and you do, it's the same targets as the doubles. That's just still what tested out. And here would be your targets for it, especially that second target right at this flat area. So how would I utilize that? Well, you have this little thing, and I'd be watching I talked about that 1 hour rotation zone, especially this big ramp up cycles at the top, watching for a pullback. So this would be the first pullback area. Does that make sense? Then you drop below that, the 4 hours way off, unless something really happens in Europe. I'd be watching for this area, then some of the other prior harmonic levels. So, did that actually hit the 87.5? Yes, it did. Sorry. It actually did hit that 87.5. So that move is complete. That's in the NASDAQ. The S&P should still have a little higher. And the S&P, if you're looking, this is a slightly sloppier with these spikes down, but it is still valid on a head and shoulders basis. So that's what, and you're going to draw it to the inside of the shoulder. So the right side of the left shoulder to the left side of the right shoulder. That's how you do it. So let's just see S&P on a bigger pullback. Again, just pay attention to this 1 hour rotation zone. And if you drop below that, the next major level is this 838.76 if we got a bigger sell off. But I'm more expecting, unless something comes out, for it to base up here, especially with non-farm payrolls coming out tomorrow. Crude did trigger an aggressive buy today, just closing above today's high. So this was a breakout intraday play. Did it? I thought it was. Let me just double check. Yeah, 14 to 16. Yep, it did close. I thought I looked at that earlier against this level. So even on a pullback, that's not invalidated unless you get a close below yesterday's low. And this is a aggressive pattern because we could easily pull back again and make a stronger bottoming pattern down there. So that's what I'm keeping an eye on there. Let's see what else. Notes. I've talked about this. I'm sort of doing a macro stuff because we'll fine tune it tomorrow. Remember, I talked about though this would be an inverse, still sloppy, but this is the left hand shoulder, head, and we could be forming the right hand shoulder now. And we've started to pull back enough to really get a nice clean shoulder in there for the next rotation move higher. So I can't really, I want to make sure we get a right hand shoulder, but that's why I'm watching, because then that would be reversing some of this move and we'd have a nice bullish or note play coming up for a longer term potential trade. Dollar index sort of stalling out at this harmonic. I'm going to be watching for a slight potential pullback. So if you get that buy signal in the euro, we might get that pullback, but now it's the back to the daily rotation zone and the breakout level. VIX, I talked about this morning, and we rolled over on the open with momentum bars. And I said I was watching for that breakout play, and here was the momentum bar right off the open. Right off the open. And then we just continued higher. So that was your little breakout play today. We had a question on Bitcoin. Bitcoin still, yeah, we've come up, we've confirmed this double but not triggered it. So the double top stalled out at the first, but this is not triggered yet. Would still not be surprised to see that return and just a return to the rotation zone on the weekly basis before the next major rollover play in that. Tesla, by the way, hit the double top, never came to fruition because it never even got close. But this double bottom that triggered, launching up, you see stalling out at the next target, at that final target, and then you use the harmonics for the next target move, and now you're back in consolidation. And at the bigger picture, we've returned again to the weekly rotation zone. So on one more push higher, if we get that out, the next major resistance is about 793. So what else do we have? Oh, hold on. We got that question on the spiders from what I'm trying to do them in order. You still, where is it? You still here, Chris, with the spiders? Could you see the SP? Well, again, ask me if it could be a bottom, not the bottom. The spiders, you were wondering where would that go again? Oh boy, 325 or 350. My next targets, you have the rising 200 on the weekly with the 50% retracement coming in right at 350. That could be a shorter, that would be more of a possible, a bigger bounce play bottom and then another rollover play. And then the next key bottom to me, minor would be about 336, majors about 316 to about 320. You get the close below this 316 area, then I'm really targeting a much lower play. But those are two potential bottoming areas based off the longer term charts. I don't know where. Anybody seeing wavy? I do not trade this, but I will take a look at it. Akshat. Did I say that right? Let me get the bigger picture on this. And again, especially when we have Bob's on, and I'm not ignoring questions, we have to get Bob out of the way first because that's what's best for everybody to get their Bob questions answered because I can always stick around longer. So, I mean, you're getting to from my perspective, with this flag pattern, you're getting to a pretty key area on this rally. Running up against the 25% harmonic with this downward sloping channel line. So I'd be watching for some pretty key resistance up there. I want to see where this little retracement level is. So this area right in here between about 35,446 to about 35,700 is key resistance. If you did get a daily close above about 35,800, then my next target would be 37,000 roughly. And your major target uh, that you could reverse anywhere in here between even 38,170, that's a potential rollover zone if you don't roll over with this channel, but I'd really be watching for a potential rollover with this channel. So if you're along this, I would be aggressively moving up stops. Again, can't give individual trading advice, but I'd be moving up stops more aggressively for another rollover play here. If you once you do break below about 32,150, your next key support area is back down at about 30,500. What's that level? That's the weekly 200, and again, a retest of the bottom channel line. So there's your quick analysis on that. Will the rates go down after a few months? I'm expecting rates to go down after it might be more than a few months, but rates will go lower again, yes. Where do we sit? Can I look at EVH? Yes, thank you for being here, Charles. When are they going to fix that? Hey, somebody reach out to TradingView and tell him Mike's aggravated. Evolent Health. Evolent Health. Oh boy, another one. Zero PE on this one. Oh, we know. I'd be watching longer term. Let's just get some analysis going on here. So, I'd actually be watching for within a next little bit, a short-term rollover play. Your next minor target is 36.26, but I'd be watching a short-term rollover play. You start breaking below the daily rotation zone. The top would be about 32.36 on the next pullback, but you start getting back below this base of about 30.28. I'd be watching for a retest of this 50-week. And if you break below that 26.86, I'm not bullish on this, just even based off fundamentals long term. And I'd be cautious. You start breaking below, you can keep with the bullish mode, but you start breaking below this little shelf here. Then I'd be watching the pullback, and the key area I'd be watching is this 50-week exponential. You still have a gap fill left there, about 27.25. You get the close below the 50-week, then I'd be watching for a retest of this low area. Let's also put the harmonics up here, the short-term harmonics, because you get the close and you can use this as if this pushes higher. Make sure you ratchet up your harmonics, but as it stands right now, look where that 50-week is with that pullback harmonic about 26.50. You get the close below there. Statistically favors a return to this lower price action, and then you have a massive double top. I should say potential double top, because this could pull back and turn into a triple. But since this is not a stock I analyze all the time, I'd be very wary of that. Now, until that being said, you got to trade with the trend. The trend is still up unless you start breaking below these short-term levels. ARC ready to break out higher. I was looking at ARC going into the close. And the only way this is happening from my perspective is on that weekly. Oh, come on. We're 46.94. I need this to close tomorrow. 46.83 today. The high being 46.90. This to confirm the doubles 46.94. I need a weekly close above this, and it would be the first and second targets based off the weekly rotation zone. So this is not triggered yet. I'd wait for a trigger and then I pull back play personally. But that's where I'm talking. We're still getting that mega crap rally with stuff like, I know GME announced the stock split, but you're just getting people piling to this, and then you get the sympathy rally with AMC. By the way, AMC, this double, these levels, you need the close below at 62.5 from this level. Never stopped it out, and technically it's heading back up. So we're keeping an eye on that for these continued crap rally, but that's where we sit. Mike, will you explain how you use extensions? I know you use eighth increment, but I don't know which ones you use for your targets. Yeah. Let me jump back to the S&P. So, because I put these on this morning, so I went from the lows back on the 30th, because this is the longer move, to this big pausing bar high. And then how do I use it? Again, for the people newer here, it's the 0.125 and 0.25 on the trend-based fib extension. And I've just modified the fib levels to harmonic levels. So it's a click down here. First click is down here. Second and third clicks are up at this high. The 12.5 I generally use for a stop reduction, meaning breakout play, as I talked this morning, breakout play, stop reduction, take profit area. And then the next one I use is a take profit area or watching for a topping pattern. And what did I review up here? We got the topping pattern. And you're not trying to nail it to the tick. You're trying to find an area where we could get a reversal. And that's where we formed a reversal pattern. So I like to even unwind into key levels before the weakness occurs, because then I can always re-add to that levels on pullbacks. Let me know if that's answers your question, Connor. So that's how you do it. All right. Yeah, we can. All right, that did answer your question, then I take it. Because that gives you a roadmap. And remember, you can use that in conjunction with other key target areas. BBBY. I don't understand your comment there. John Iachino? Hindsight is 2020. Is that you, Bob? Okay, I did answer it. Let's see where we sit. Yeah, BBBY. There's some. I think it was director buying today, coming out of oversold conditions. Remember, this is why I talked about this is not something I'm looking to short, because we can get very interesting rallies, and I think this will be at some point a takeover candidate as long as they avoid bankruptcy. So this is also still a news story stock. A lot of people who trade the meme stock still trade BBBY. Amazon, you're still in your key rollover play. Remember my targets area, we have the 50. So on a continued rally tomorrow, this is where I'm watching for anywhere in here for the rollover play. 11.18, we've had the little run on it. We had the aggressive buy back on July 1st. And now we've had a nice 4-day run. And we're back between the 50 and the 62.5. So the next target area is about this 118.55 with the 200. You get a daily close above this, then statistically we should then retest some higher grounds, but this is a very key area for Amazon, especially with cycles topping on the daily and the weekly basis. So when that's being said, let's say you just eked out a slight close above the 62.5, and the 62.5 levels technically 119.06. So even if you get at this 50, you need to close above 119.06. And based off where cycles would be, I wouldn't be adding to a position there. I'd be watching for a pullback and for some key levels to hold, and then a rotation back up for a bigger play. I already covered the VIX, Coco. All right. With that, I will chat with everyone later. Again, we've had some more new people in here. Thank you for being here. Really appreciate this. And if you're new here and you'd like to know what we do, we have multiple live streams a day. You can also call out stocks, especially after hours like this one. If you are new, please do consider subscribing and ringing the bell, because I pretty much guarantee you will learn something different than you get on most channels here. And I think longer term people who've been subscribers and attend these live streams regularly have at least learned something that they did not learn elsewhere. You are welcome. Your niece has become a regular now. Hey, Chris, you are welcome. So we got a lot of people. All right. With that, I will wrap it up. We'll be back here for non-farm payrolls in the morning, 30 minutes after they come out, and hopefully we'll have Bob on to give his takes, and then we'll set up for the final day of shortened week trading this week. And remember, major earnings start next Thursday, and we have CPI data. Hey, AP's World, you go. See, AP's World, another one who's starting to tune in regularly, even calling me Mikey, just like Bob does. So, thank you for, I really appreciate all the new people who are joining this live stream on a regular basis, and thank you for contributing. And anybody hiding in the background, because I see a lot of people out there, don't be afraid to put in comments. Put in some comments. All right, and ask some questions. With that, I'm wrapping it up for now. Got to take the dogs out for a walk, and I'll talk to everyone later. See ya.